Hi everybody, this is Phillip Guan, CPA. Welcome to the classes of Trade Tax Software for 2025. This is class number 4. I am really calling this class number 4 for the better training for all of you. So I'm going to straight go to the training classes number 4. Okay. Guess what time is it right now? It's 11:25 p.m. Pacific Standard Time. Right now it's Saturday afternoon. And do you know why I'm doing what I'm doing? Because I love to share what I know it. So many people have been helped me all my life. I just want to share my share. So in some way that I could help you. Now, let me see. Class 4. This is class 4. Now, let me do the reverse. Let me show you what it looks like. It's a simple tax return. The end result. This is not error message because all the state tax return had not been ready yet. So now it's a single with a W-2 income with Schedule A, which is very similar like class number 6. The reason that very similar to class number 6, I both update class 4 and class 6 with Schedule A. That's why they are very similar. So now, nevertheless, I'm going to go through this so that I can upload it for your training. Now, in order to do this tax return, in the far left corner, there is a data entry like that. You see my mouse. And as you open, you see many tabs like general, income, adjustment, credit, 2 of them. You see credit, one is black, one is blue. Why is that? As you can see, the black is nothing that's blue out, and the blue one, there's one tab is blue out. So what that really means is all the tabs, if they're blue, that means something used to have an input in last year, 2024. And then more likely, 2025, you need to do the input. Where the black color means last year, 2024, there's nothing in there. More likely, in 2025, if there's no new additional information in this area, you don't need to do the input. Now, in the CPA accounting firm, there's a very common, and people, when you ask question, and for example, let's say, hey, Chris, may I ask you a question? Are you like, Chris is the professional in the field. So guess what he's going to say? Hey, Chris is going back to say, hey, Philip.
Yes.
Okay, so what should I do? You say, Sally. What the heck is Sally?
Same as last year.
Similar as last year.
Similar.
Yeah, similar as last year. So now let's look at this. Very good. So let's look at that. So this person, the name won't change, right? Is a single at this moment, still as a single. And then this is a social, first, last, birthday, engineer, this is a job, the phone number, and the email, home address. And sometimes they change this. Now, this is the mailing address at the moment you file tax return. So for this person, well, I change it to our zip code. So if they have been moved, so you're going to click this. Let's say 2024 tax return is not this address, and this is a new one. You need to check this one. If this is a military, you need to check this. But let's say it's not military, but they do move. Now, if they move, let's say if they're from New York, okay? So now they change it at the end of the year, like Well, when you file 2025 tax return in early 26, the resident state is still New York. So you still need to file New York State tax return. You do not need to file State of California tax return if you have no source of income from State of California. You're not staying in State of California for the requirement. So that's a special situation. But in the most situation, let's say you live in State of California, and you're also only a State of California resident. So now in the middle, there's help save this medical expenses, and then there is the ID. No, California ID. No, you can do California ID. You can passport. You can do green card, but there must be a photo, and they must be not expired. Now, State of California normally with the letter first and then a number. Obviously, this is the makeup number, right? State of California. And the issue date is normally in State of California ID in the far right corner. Far right lower corner. The expired date is in the middle, upper middle, stay now in red color. Okay, so in this situation, you also have, let's say, direct deposit. Let's say this is Federal State of California. And here it's very easy to make a mistake to CO. Okay. If you go to CO, the California refund is not going to get it. But you're going to get error message. So you won't able to make the mistake until you collect it. So that's a good thing about software. And also, every single thing you do and you double check it. And we also have someone who's more experienced than you to double check everything of yours. And then on top of it, I will check yours. Check the things after two of you check. The triple check. So that's the routing number, that's the account number, and checking. So 2 times of it. And this is 1040. Now, after you input it, you go to view and you double check it. You get the original, maybe a paper, maybe electronic, no matter what. You want to double check that. No. Or because in here, they was assuming the W2 is very large. Last time I do a training, I changed this one. Now, if it's more than $500,000 income, that's what we're talking about. Now let's go back to something average, like 120K. Okay. Let's say they're doing 1%. Now, in this situation, the W2 is getting to like this. It's a very standard, let's say, in the Bay Area. No matter how much or how small the client make, you, with all the respect, don't make any comments. So now, for W2 check or the individual information check, every single letter, every single number. When you go to Costco or when you go to Starbucks, you order coffee, they write your name. Like for example, my name, Philip, Phillip. If they write down my name is Phillip, I will not happy because my name spelled double L. I will correct them. Hey, sir, my name is double L. Even though it doesn't really matters, but people, it's their name, okay? Their name, their social, their home address, every single thing shown in tax return is the permanent record. It had to be respected, no mistake in this area. We are not tolerant with any mistakes. That's why we go through 3 checks. You did it, you check it, somebody check it, and I check it again. So I'm joking with a lot of my client and not client, my staff, that if you follow my procedure and you really check, you not just click, you really check against the original. Either paper format or original electronic format, it doesn't matter. But you check everything. It's very difficult for you to make mistake. How can you make mistake? Now, let's go to Schedule A. Schedule A is talking about when somebody have a primary residence and there's a mortgage and property tax, right? So now I am going to tell you this. Schedule A. Let's say this is the state income. When the software fully developed, you don't need to put this one in. So we check this little box. Okay. In the year, let's say you bought your sales tax is a lot better than your income tax. You can choose flip, but more likely, unless you're making the big purchase, like something that you outweighs of your income tax. It's not and. Okay. Or you can simply input everything into it and let the computer does it for you. Chooses which one is the best. That's probably the best. Okay, now that's the state tax. That is the property tax for your primary residence. Let's say if you have a mortgage less than 750K, for example, and then straightforward, and they let's say they bought in recently after 2018. So you can simply put the 1098 box 1 mortgage interest right there. Or you can open this, you put it in here, but you have to choose your Schedule A or whatever it is. In this situation, Schedule A. I don't really like this way because it's easy to make mistake. And you may forget to put this, or you may forget to put the source of it, and then it's not easy to check it. So I don't like this way. What I like it is either straight in here, or it is more than 750K. You're gonna come here. Let's say if you have a 1 million houses, let's say if you have 1.2 million houses, put 200 as a down payment, and you got a 1 million mortgage. Now, you really count how many zeros? Like 6 zeros. It's okay to count zeros. We are human, right? Let's say if you get 70% of the 1 million, that is 70,000. It's very possible you have some even have 8%. You get this. This is going to carry over what is the deductible. Now in here, Schedule A, Do you remember it was 70,000 and you only can deduct this? Why? There is a, let me show you where is that form that you can actually see how this number, this what we just input, right? That's what we have. But yet the law said after 2018, to be exact, it's after December 15 of 2017, the law changes. It was 1 million. In my personal opinion, they should go up, right? The mortgage, the houses go, prices go up, but yet we respect the law. The law said is 750. So there's only 75% deductible. 75% of this is equal to this. So this is deductible, like 15. That's what is like 16, non-deductible. Now here's the good news of state of California, allow 1 million. State of California, not all the time follow federal law. And sometimes more favorable, sometimes unfavorable. In this situation, California is more favorable than federal. The law difference is federal IRS only allow you deduct up to 750K of the mortgage. And yet, state of California allow you to do up to 1 million. That means that additional 17,500 is deductible for state of California item-like deduction. So you need to manually input it. Because the state of California portion of the software had not fully developed in this release, so I won't able to show you. But I could show you in the future when they are released, okay? So now, as a result, going back to here, Schedule A, it's not 70, it's this. But still good one. Now in here, they have all the number in here because they're still under that 500, right? 500K. So therefore, they still get the 40K. The law said if you more than 500K, this will go back to 10,000. But this software release, they have not been updated one. Let me show you why. If I change this 500 in here, they will change it, update it later. Let's say for that would be nice, right? 5 million. So now this is 510K, right? Under this situation, as we all know the law, that's why I ask you to get one of the three. Number one, tax prepare 60-hour tax prepare certificate, open book exam, or EA exam, and get the license, get the EA license, or get CPA, because you are split as a professional. That is besides the degree. Now, you study, you know the law are different. The law changes. They have a limitation. Okay, so therefore, and they're going to show you how that number changes in here. Okay, so they actually, they shows you why it is. So, and then as in the future year, a future time, I'm going to show you when the fully version of the 2025 tax return, I will show you exactly how it works. Okay, so it's not going to be now. So let's go back to the more, it was like 120K. 100, if you make 120K, more likely you're not going to be by 1.2 million houses. Let's say bump 6% up, 240K. Okay, right? I'm not suggesting people overspend it. I live my house in the same places for the past 23 years. Since the first day I opened this business. I really like Warren Buffett saying, stay humble, and live below mean. Let's say there's like, for example, DMV the functions in here. What you're gonna have? That is gonna give them 92,000 deduction. That's pretty cool. That never happened in last year. Last year, this one was limited in 10,000. They can only get 60. So that all of a sudden have 30,000 more deduction. And in the early 2026, a lot of people, after 5 tax return, they would then send home because they have an unexpected huge tax refund in amount of 8 to 12,000, depends on the tax bracket, because the 30,000 tends that the margin tax rate, that is how that fits. So in this situation, this client, the margin tax rate is about 20,000. No, it's about 24. 24% times 30K. That's what the further can deduct, can save. State of California, E equal to 10K, 10%. That's about, let's say 1/3. 1/3, let's go to 10,000 approximately. So with that, I am concluding today's training. Let me summarize back what we have done. Single person, one W2, it go flag it because we changed the numbers for the illustration purpose. It's not we are making mistake. The good thing about this software is once you change something, they will can reflect it to you, catch your attention, you double check, make sure that's correct. By the time we finish the tax return, we have all the green check mark all over. But when you print out, those green check mark doesn't show up. But that means that's how we evidence ourselves, due diligence. So now, in this situation, if they have that much, normally they're withholding, they should not be just 10%. Normally they're about at least about 20% of that. And then in here, normally 10% of. Like similar like that. Okay, now in this situation, they are going to get some refunds. Pretty good size of refund. In this situation, almost 20K. Kind of going to be happy. So with that, when the people who normally need to pay fourth quarter estimate, they may not need to be paid because the change of the law. But you need to run the illustration to see it as it is. With that, I'm going to conclude today's training, and thank you very much. This is for Phillip Guan CPA.